Bitcoin halving, theory and implications for investors. Bitcoin halving, also known as the halving event, is a significant moment in the world of cryptocurrency. It occurs approximately every 4 years and involves a reduction in the reward that miners receive for validating transactions on the Bitcoin network. This event has far-reaching implications for investors, miners, and the overall ecosystem of Bitcoin. In this article, we will delve into the theory behind Bitcoin halving and explore its implications for investors. Theory of Bitcoin halving. Bitcoin halving is built into the design of the cryptocurrency to control its supply and ensure scarcity. When Bitcoin was created by an unknown person or group of people using the pseudonym Satoshi Nakamoto in 2009, it was established that there would only ever be 21 million Bitcoins in existence. To maintain this fixed supply, the reward that miners receive for adding new blocks to the blockchain is halved approximately every 4 years or after every 210,000 blocks are mined. Initially, when Bitcoin was launched, miners received a reward of 50 Bitcoins for each block they mined. The first halving event took place in 2012, reducing the reward to 25 Bitcoins. The second halving occurred in 2016, cutting the reward to 12.5 Bitcoins. The most recent halving event took place in May 2020, reducing the reward to 6.25 Bitcoins. The next halving is expected to occur around 2024, further reducing the reward to 3.125 Bitcoins. The halving process will continue until the maximum supply of 21 million Bitcoins is reached, estimated to happen around the year 2140. As the reward decreases with each halving event, the rate at which new Bitcoins are created also slows down, leading to a gradual reduction in the inflation rate of Bitcoin. Implications for investors. Bitcoin halving has several implications for investors, both in the short term and the long term. Here are some key points to consider. Supply and demand dynamics. The reduction in the rate of new Bitcoin creation due to halving events can lead to increased scarcity and potentially drive up the price of Bitcoin. This is based on the economic principle of supply and demand, where a decrease in the supply of an asset can lead to an increase in its value if demand remains constant or increases. Price volatility. Historically, Bitcoin halving events have been associated with increased price volatility. In the months leading up to and following a halving event, the price of Bitcoin can experience significant fluctuations as investors and traders speculate on the impact of the event on the market. Mining economics. For miners, the halving of block rewards can have a direct impact on their profitability. With a reduced reward for mining new blocks, miners may need to upgrade their equipment or optimize their operations to remain competitive and profitable. Long-term investment thesis. Some investors view Bitcoin halving as a bullish signal for the long-term value of Bitcoin. The decreasing rate of new supply combined with increasing adoption and institutional interest in Bitcoin can create a strong investment thesis for holding Bitcoin as a store of value or digital gold. Market sentiment. Bitcoin halving events often generate media attention and hype within the cryptocurrency community. This increased awareness can attract new investors and traders to the market, potentially driving up demand for Bitcoin. Regulatory environment. As Bitcoin continues to gain mainstream acceptance, regulatory developments can also impact investor sentiment and the overall market dynamics. Investors should stay informed about regulatory changes and developments in the cryptocurrency space. Conclusion. Bitcoin halving is a fundamental aspect of the cryptocurrency's design that impacts its supply, inflation rate, and market dynamics. For investors, understanding the theory behind Bitcoin halving and its implications is crucial for making informed investment decisions. While Bitcoin halving events can lead to short-term price volatility, many investors view them as a long-term bullish signal for the value of Bitcoin. As the cryptocurrency market continues to evolve, investors should stay informed and adapt their investment strategies accordingly to navigate the opportunities and risks presented by Bitcoin halving events.